Hi, it's Laurel Dietz with Alinea Legal Coaching. And I'm here with Jen Lowe of Dominion Lending Centers. So working with people going through separation and divorce, often what we have are people who need to buy or sell homes. And I often get referrals or I need to refer to a mortgage broker. So I thought it would be useful to ask a few pressing questions, have Jen here answer them. And hopefully, if you have any other questions, you can follow, comment in the comment box. And if you have further questions, we can get Jen back here and have her answer them for you. Now, Jen, why don't you tell us a little bit about who you are, what you do, and where you work?
Awesome. Well, thanks for having me. My name's Jen Lowe. I'm a mortgage broker with Dominion Lending under Modern Mortgage Group. Locally here in Victoria. Being a mortgage broker, what I do is arrange mortgages for clients. I have access to banks, credit unions, and other types of lenders to find the best mortgage product that suits in everybody's individual needs.
Okay, so what would the difference be? This is just very basic, and many of our watchers will already know, but what's the difference between a mortgage broker, going to a mortgage broker for help with lending or getting a loan or a mortgage, and going to your bank?
When you go to your bank, and I come from the banking background, actually, I used to work at two of the major banks prior to becoming an independent mortgage broker. When you go to your bank, they have access to that one bank's products. So they'll want to fit you within the box of what they offer. So you're getting their current rates and their product. What I do is I'm looking at different lenders to find the best mortgage product for your individual circumstances. Looking at the fine print of each type of mortgage, just, and being unbiased to any one particular bank.
So essentially you're looking for at a wider scope of options for your clients.
Exactly. Yeah.
So
at no cost.
At no cost. Okay, that's pretty critical too.
Yeah.
So yeah. I just wanted to clarify something we were talking about just before we started recording. Was you said you worked with Modern Mortgage Corporation, is it?
And Modern Mortgage Group. Yeah.
Brokers, sorry, group. Modern Mortgage Group and Dominion Lending. So can you describe what's that relationship between Dominion Lending and Modern Mortgage Group?
Yeah, so Dominion Lending Center is the across Canada brokerage. And then underneath that, that's basically the umbrella company. Underneath that, all the mortgage brokerages are individually owned. By working under Dominion Lending Center, there's Dominion Lending, there's Verico, Mortgage Depot, there's all these different ones. Dominion Lending is the biggest one across Canada. And by working under Dominion Lending, we're able to pool, all the money is pooled, which then gives clients better rates.
And would you say sometimes you might have more options that other maybe mortgage brokers might not have access to? Okay.
Yes, based on volumes. Yep.
Yeah. So I guess I would say then what I will be recommending to my clients who don't have a connection with a lender already, I'll say, and even if they do, I will be recommending that they reach out to you or to a mortgage broker and to consider, you have your options between mortgage groups. And there's I'll be able to explain that relationship to them, and I'll certainly tell them to be doing their research, but it sounds like Dominion Lending, as one of the largest ones in Canada, is going to have considerable market pull. So it's always a benefit, especially in these difficult times with rising interest rates.
Yes, that's right.
So what I wanted to ask you is if we could focus this conversation a little bit more on separation and divorce. What would you say are the top three or the most important thing for someone who's going through a separation? What do they need to know about qualifying for a new mortgage?
Well, in my notes here, I mean, you have, in order to qualify for a mortgage, you need to have a legal separation. If you're going through a separation, you have to have a legal separation agreement in place.
Okay, so that is a key piece.
Yes. The
You
reason
must have
for
a
that,
signed separation agreement.
yes. Now, it's kind of a catch-22 because clients want to know whether or not they can get a mortgage before they sign the separation agreement if they want to buy out their spouse.
Yes, I'm often telling people to figure out how much they might be able to qualify for. Am I just wasting your time when I tell people, why don't you talk to a mortgage broker and get an idea of the amount they might be able to qualify for?
Yes, it's a two-step process, but in order to get a mortgage approval, we have to have that separation agreement in place. And the reason why is what the lender wants to know is, are you paying or receiving child support, or are you paying or receiving spousal support? Because those two things change or can affect the amount of the mortgage you qualify for. So if someone wants to do the pre-work and see what they qualify for, but then unfortunately they're having to pay $1,000 a month spousal support, that affects what I told them 3 months prior for what we were hoping for.
So when I'm talking with my clients, then what I would be recommending, or if you're going through this on your own or just watching this video, is that when you are approaching a mortgage broker to get a sense of how much you might qualify for, you better be pretty clear on what you're likely going to have to pay or what you might likely get for child or spousal support. And then know that any changes to that amount will affect the amount you can pay for or qualify for a new place.
Yes.
Okay, so that kind of, then, you know, there's usually a few scenarios that people go through. So there's the situation where you want to go and just buy a new place, completely new, not you're moving out of your old house and maybe you're getting paid out, etc. You want to get a new place. The other situation, which comes up quite frequently, is you want to buy out your ex's interest in the family residence that you were living in. Because the house still works for you, even if your relationship doesn't, and you want to know how much it's going to cost or you want to figure out how much you can afford to pay them. Are there any special mortgage rules or benefits to buying out your ex's interest in the family residence?
Yeah, there is a program through CMHC where you can reborrow up to 95% of the value of the home to buy out your spouse.
Okay, so that's then just so that everybody's clear, how much of a down payment would you need to have if you're buying a new place?
5%.
To buy an entirely new place. And okay, but you can borrow.
It's fine. 5% of the first 500,000 and 10% of the amount above, but
yeah. Okay, I see. And so then, but if you're just purchasing your own home from your ex, it's just 5% flat. I mean, that you have to keep in the house.
As I say that, when I was doing my research, you can reborrow up to 95% of the value, but I would have to double check. I would want to double check and confirm that, is it 95% up to 500,000, and do they have that minimum amount above? I'm not 100% sure on that.
Yeah.
There is other stipulations to that program that you quite often, when we're seeing separations, there's other debts that also need to be separated. And under that specific program, you can't include any other debts. It can only be buying out the spouse from the equity of the property.
I see. So if there are other debts, you have to be able to carry those debts as well. You can't roll everything in together, which is often what people want to do, or what they're looking to do, I guess, at the time of a buying out their ex.
Yes.
Okay. So Sorry, did you
So
have?
I'll get the clarification on that, because as I was saying that, I was second guessing the 95%.
Yeah. Well, when I was at law school, I was always told by my professors, don't memorize the legislation, don't memorize these rules because they change. And your best friend, the best thing is to always look it up every single time. So you check that, and we'll put it into the comments of the video when we post it. So then my last question that I have prepared is, what would you say is the top mistake that you see people making after, or top thing that people are extremely confused about when they come to you after a separation or divorce and they're applying for either refinancing or a new mortgage?
It's that piece we kind of touched on previously, and it's about what comes first. So the lender wants a firm separation agreement, but the client wants to make sure they qualify before they get a firm separation agreement. So and needing to know, there is some back and forth there, and knowing that an estimate of what your potential spousal support and child support may or may not be, and before that's finalized, we would need to communicate what those final numbers are.
And I would I would suppose it would also be affected if you were taking on, like, if there was credit card debt that was family debt. Are you taking on all of that debt, or are you splitting it? How is that going to be dealt with after the separation? They'll probably want to have a little look at your financial picture in that way too. And if you end up taking on more unsecured debt, they're probably going to be a little less likely to lend as much as maybe you wanted.
Yes. One other thing is, do not enter into a purchasing agreement, a firm purchasing agreement of a new property until your separation agreement is finalized.
That is critical, because, and I will speak to that, is that you can never be guaranteed that a separation agreement is going to be final until it is signed by both people. And that could, if you can't end up buying something, you can't get the lending for it, you can't end up buying something, it could cause you a lot of legal problems.
Yes.
Well, thank you so much, Jen, for joining us and clearing up some of those. We actually see a lot of those questions coming through to us from clients, and there's always a lot of confusion between, I think it's that piece of, I want to get a sense of what someone might be able to afford, so we know what we can offer to the other side when making proposals. And their mortgage broker tends to be a little skittish about providing any numbers, because they don't want to be promising something that they can't then fulfill, because other parts of the deal have changed. So
add to that an increasing interest rate environment.
There's certainly been a lot of stress, I would say, amongst people out there in trying to get either rush agreements through, or delaying appraisals so that we're not rushing agreements through, so that all sorts of fun little things people trying to do to affect maybe getting a better deal or a worse deal, or anyhow.
Right.
Well, thank you for joining us. How can people reach you if they're interested in working with you?
Yeah, my number is 250-217-4925, and my email address is jenlowe.ca, which is JENLOWE.ca.
That's great. Well, thank you so much, Jen. And we'll be, if you are watching then and you are enjoying this content, then please hit subscribe, hit the notification button, and certainly hit that like button. And we'll see you next time.
Thanks a lot for having me.
You're welcome.